Hi and welcome to Yahoo Personal Finance. I'm Alex Brophy and joining me today is Brenton Tong from Financial Spectrum to talk about minimising tax this financial year. Brenton, thanks for joining us.
Thanks for having me.
Can you give us a few tax minimisation strategies heading into the end of the financial year?
Yeah, sure, not a problem. Obviously, at the end of the financial year, there is a deadline. So you really want to make sure that anything you want to do is done by that time. There's a whole host of things you could be doing. The more common strategies which we see, people making contributions towards superannuation. If you're a PAYG employee, it's a little bit harder, so you have to do that by way of salary sacrifice, which you need to do through payroll.
Okay.
But you still have a couple of pay runs left just to get that little bit extra in, so that's a possibility. If you are self-employed, however, you can make lump sum contributions towards your superannuation. You just have to make sure that you stay below the contribution limits.
Right.
Other things which people can be doing is prepayment of expenditure. You can pay for something in advance and claim a deduction in this financial year, but obviously just don't get too overzealous with regards to buying things in advance, because you want to really make sure that it's something that you are going to use. No point in spending $1,000 on something that you'll never use just to get the tax deduction for it.
Sure.
Prepayment of interest as well. So if you have an investment property or a share portfolio and you've got debt that was utilised in order to actually buy that, you do have the opportunity of paying next year's interest this year. It's quite popular. People get quite enthusiastic about it. However, one thing to keep in mind is if you're prepaying next year's interest, then next year you aren't actually going to have any interest expenditure to offset the income that you are getting from that investment.
Right,
So
okay.
what you'll need to do is prepay the next year, and you do get locked in that cycle until you find yourself in a situation where you're no longer earning any income.
Sure. And what about more complicated strategies, sort of company structures, that sort of thing that you might throw in there?
Yeah, well, company structures, trust structures, there's a lot you can actually be using. There's also a lot you can also do in the superannuation space as well, which is a lot more complex. But you've got more complex negative gearing. You've got different share structures that you can actually utilise, like instalment warrants and things like that, and use them to prepay. Mm-hmm. With trust structures, you've got distribution of income. You've also got other prepayment strategies as well. If you are utilising companies and trust structures, just beware of the Part 7 ATO rules, just to make sure that if you are pulling money out and moving some money around, that you're doing it properly. Okay. But for the more complex ones, we usually do recommend that you seek the services of a qualified accountant.
Right. Are there any rules of thumb around when it becomes feasible to set up your own trust?
There are, I guess, some general rules around that, but there's no hard and fast. So there's no limit. You could be earning $1 million per year as a PAYG employee, for example, and a trust structure may prove no benefit to you whatsoever. Okay. But you could be a doctor earning $200,000 a year, and a trust structure could actually be very, very useful for you. Trust structures are used sometimes to spread income around, and as a result of that, you may pay less tax. But they're also used a lot for assets protection as well. Right. So if you are running your own business, if you are in a profession where litigation or liabilities may actually be a problem, that it might be something you want to explore.
Okay. And looking ahead for the next month, and in light of the budget changes, are there any particular loopholes that might be being closed, or anything that we need to capitalise on before the end of the financial year? There
are no major loopholes which are being closed. The law is being tinkered with on a regular basis. Probably the biggest change that's occurring is that in light of the large hole that the government has found in their revenue streams, they are looking at ways to just ensure that the tax revenues are a little bit higher next year. And one of the ways of doing that is to declare certain things are no longer deductible. The list is, while not incredibly long, there are quite a few things in there, so I'd suggest you seek the services of your accountant. Find out what type of things you would normally expect to claim as a deduction, and just see whether or not they will be deductible next year. If they're not going to be deductible next year, you do have the opportunity of potentially paying for those expenditure this year, buying the items or buying the services. But again, as I said before, just make sure that's actually something that you're going to use.
Great. Some great tips there, Brendan. Thanks for your time.
Thanks for having me.
See you next time at Yahoo Personal Finance.